Hello folks, this is Matt Honeycutt from Fraser Honeycutt Financial with your July 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events from last month and give you some insight into what that might mean to you as an investor. Please stay tuned at the end for a required disclosure statement. Greece was again at the center of headlines last month as the country edged ever closer to financial meltdown. On the domestic side, second quarter earnings season kicked off, giving investors a clearer picture of how companies did last quarter. In mid-July, Greek and European negotiators were finally able to hammer out a compromise that keeps Greece in the Eurozone, while instituting some of the reforms creditors wanted to see. However, the wheels seem to be coming off the deal already, as both sides ultimately want very different things. Greece wants austerity relief and debt restructuring, while creditors want further reforms. Will the deal lead to a financial resolution on Greece's issues? We're not so sure. Earnings season came into focus in July, and the picture so far is just so-so. Out of 263 S&P 500 companies, earnings were just 3.2% year over year on essentially flat revenues. The energy sector is dragging on overall earnings growth because of low oil prices. Taking energy companies out, analysts expect overall S&P earnings to be up 5.3% year over year on 1.2% higher revenues. The results tell us a lot about the weakness of companies have experienced in the first quarter, and that stayed with them in the second. Will U.S. firms be able to shake off the doldrums in the second half of the year? It's hard to say. With the European and Chinese economies still struggling with growth, the global demand picture doesn't look too strong. Domestically speaking, the economic picture is doing reasonably well. Hiring has increased steadily, and wage growth is edging upward, but consumer sentiment dropped in July. This is probably because of concerns about Greece and China. We also got our first look at second quarter gross domestic product, which showed that the economy grew at about 3.2% last quarter. While economists had predicted higher growth, it's still a vast improvement on the 0.5% that the economy grew in the first 3 months of the year. The Federal Reserve met again in late July, and though no interest rate changes were announced, the central bank has reiterated its intentions to raise rates this year. The Fed cited improvements in the job market in support of its intentions, though future decisions will still be contingent upon further job gains. Are expectations baked into stocks and bonds? We don't know for certain, but the Fed has been telegraphing its rate play for months now, so we hope that markets won't overreact when rates finally start to go up. How fast interest rates will go up when they do go up, we still don't know. But the Fed has said that once they start raising rates, they'll move cautiously and continue to keep an eye on the data as they go. How soon will your credit card rates go up? Well, that could depend on your card. It might very well happen in the next billing period. Looking ahead, investors will be looking for earnings surprises and gauging expectations for the third quarter. The economic picture is pretty mixed right now, so investors will be keeping a close eye on the data in the coming weeks. As always, we're keeping a close eye on markets, and we'll update you as necessary. That's it for the July Educational Economic Update. Once again, this is Matt Honeycutt with Fraser Honeycutt Financial, signing off for the month of July 2015. Please remember that nothing we've talked about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 503-241-5151. And we'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation to purchase or sale of any security. Please consult your financial professional before making any investment decision.